Sanjeev, Ultratech numbers were quite solid. Do you like the numbers?
Yes, Pankaj. Ultratech has been our top pick and it is the best play on the cement side. Numbers were better than expected and we stand by our conviction call is in the cement basket wherever you get, even at these levels and slightly below, it's an idea to buy it. By the way, Pankaj, you should have brought me on earlier in your show. Your market saw a 60-point recovery from the time I came back. So, maybe I'm the good luck charm you were looking for the market to revive.
Right. Sanjeev, how would you essentially look at SKS Microfinance? The expectations are that it will do quite well. It's closer to about 450 odd levels now. Do you think ahead of numbers on 27th of Jan, this could do well despite FII selling or no selling?
Well, this is one of the most over-owned and over-researched stocks, and I think whatever the results, you could see a sell-off. Reason being that there is fear and people would want to book out and you would want to sell some of your winners. For us, the NBFC space has been a clear winner, but we would like to concentrate on Bajaj Finance, LIC Housing and Group Finance, in that order. We think those three are, good bets there. And you could see, the multiples are also trading at reasonable value. SKS Microfinance, I think, has already run up very, very sharply, and because of over ownership, that would be a big, negative, because anybody and everybody would be wanting to sell once the results are out.
Right. You also mentioned earlier that results in terms of the banking space could be quite important. Axis Bank would be declaring numbers today. Forget the numbers, whatever, the numbers in terms of NPA or provisioning or profits come in. Do you think that the outlook will be much more important? And that will not only be important for Axis Bank, but what happens to ICICI, SBI, some of the other corporate lenders?
Surely, Pankaj, there are three bones of contention. One is that excess provisioning norm, which has been, which is debated. There has been no open talk about that. It is behind closed corridors. B, the change in the repo rate, where is the base lending rate? That would. But thirdly, I would beg to differ. I think a lot of asset upgradation should take place. We just heard the numbers from a small bank like South Indian Bank, and we heard, what the commentary was given by the SBI chairman. And she said that asset deterioration is over. So it's a matter of provisioning and how they are going to deal with the repo rate going forward. So for Axis Bank particularly, it was taken in bad quarters when they sold that almost 400 crore worth of bad asset which was sold to an ARC at a discount. I think the company must have taken that as a learning lesson, and going forward, I would expect much better net interest income and even improve in the net interest margin. So yes, Axis Bank would be the precursor of the bad banks in the private sector, and the PSU banks will be the key, because they've corrected almost 30% just in the month of January. So I think a lot of the bad news is already there, but you're right, we will have to wait for their commentary of what they are suggesting, how they are going to go about writing, making extra provisions quarter and quarter, and what would be the outlook for the next 1.5 years.
Right. This is the first time around where expectations are very, very, muted going into a company like Axis Bank or maybe ICICI. You think this would be the correct time for them to come out and say that what is the problem? Also, we have seen steps taken from RBI, as you said. So if they clearly communicate what is the problem, you think majority of it is in the price?
More than the majority, Pankaj. You can't have them at these levels. I mean, there is a 33% correction in Axis Bank. 550 is now what, 370. And I think a lot of that is already in the price. There is this apprehension that RBI is going to turn, and the RBI and the Finance Ministry have clarified that they stand well behind the PSU banks. There is no problem of recapitalization. There is no problem of adjustment of base capital. But I think, market fears are always unfounded and more on the rumors. So like you said, I think valuations are very, very key. Some of the PSU banks, Bank of Baroda, PNB are quoting at 4 times. The dividend yield is at 4 times. The price to book is, maybe a multiple which you are already discounting. I think it's a very, very opportune time to buy these banks and, just sit out. Once the volatility subsides, and with oil at these levels, Pankaj, we are in a very, very good space as far as inflation goes, as far as manufacturing goes. And thirdly, it will only bolster the RBI's action now on the rate cut, which I think should be on the anvil in the first week of February. All that means if the repo comes to within 6.5 to below that, it can only mean good news on the treasury front for a lot of these banks, which have a lot of portfolio of government securities. So for us, this is a very, very good time. If you can ignore the noise, you should be going at least allocating 40 to 50% of your portfolio, new allocations on some of these banks, both private as well as PSU.
Right. How would you essentially look at the metals pack now? We got a very interesting report from Macquarie today on the steel pack, which says that the government has taken steps. MIP is likely to come in, and they believe that steel sector would start growing next year. Are you of the view that valuations are good? JSW Steel, we'll just pull up the name, it's spiking. Tata Steel is also spiking. Should one start putting in money over there?
See, Pankaj, this is a very leveraged trade, and if China is hurting, then automatically as a correlation to them, these are the ones which have borne the brunt. The numbers are not going to be pleasant for the next 3-4 quarters, and the overhang of debt is always going to be there. Tata Steel is one major which may be one of the better position because it's in the process of selling a lot of the Chorus assets. Once that happens, return on equity should improve as debt falls. But like we said, you have to be an investor with a 3-year outlook, because only then you will make money of 40, 50, 60%. You don't want to be in it for 10%, 20% trading rallies and then being caught on the other side once the collateral turns. So like I said, there is a lot of space where you have 1 year, 2 year going forward, a lot of stock sectors which are showing excellent risk reward, and maybe a couple of these steel counters. So yes, Tata Steel stands out over there. It has not gone back and tested the lows of 200 which it did in September, and if we get more news on the Chorus sell-off or the disinvestment, then that would be the icing on the cake.
Right. How would you essentially look at some of the debt names? Because of all the fall that we are seeing and globally that we are seeing, liquidity is surely drying up. You think companies which have debt may face further issues?
That is there, Pankaj, because we have to see how fast the bankruptcy code bill can be brought about, and that the government has assured that by this budget, before that it should be on the anvil. That will be, you're giving a lot of teeth to the regulator and to the banking system. Plus, we think this SDR route is a very, very big plus, because you would have managements being taken over. So all in all, we think the debt overhang may be remaining for a few quarters, but once you start seeing more pragmatic steps by the government and the ministry, I think you will see a lot of the weeding out of the men from the boys, which has already taken place on the stock side or the price front. So it's just a matter of accepting that these were bad debts and now the managements have changed, and so that would be the key trigger which could re-rate a lot of the banking and some of these debt-ridden stocks.
Right. Sanjeev, I'll just come back to you. Markets just about a minute remaining for closing. If I look at the markets, 118 points on the lower side. About 7,318 is where Nifty is closing in, and Sensex at about 24,084. Ambuja Cements is down 2. HUL is down close to about 1%. If I look at some of the other names, IndusInd Bank is down about 3.5%. Wipro is up about 0.17. That's the closing bell for you. Markets have shut for the day, 116 points down. I think there'll be a lot of revision on the downside because majority of the recovery came in the second half. So that is something that one should focus on. Sensex about 392 odd points in terms of decline. Dr. Reddy's down about 1.5. Hero Motocorp up about 1 to 2 rupees. Grasim is down 1.3. Bosch is down about 1% or so. Let's look at the Nifty losers. As far as the losers are concerned, Vedanta is down about 7 odd percent. Hindalco is down about 5 odd percent. Adani Ports is down 5%. PNB is down close to about 6%. SBI down about 5. Yes Bank down about 5 odd percent. Tata Power down close to about 4%. Tata Motors 342. Maruti Suzuki 3.4. Reliance down about 3. Coal India down about 3. Bank of Baroda, IndusInd Bank, Tata Steel, Z Entertainment down about 2.5 odd percent. NTPC, Ambuja Cement, Kane India are some of the other losers, down to the tune of about 2 to about 1.5 odd percent. So these are some names that essentially are seeing some sort of recovery from the lows. Names that ended in the red. Idea is up 0.5%, Bajaj Auto is up 0.5%, Bharti Airtel 0.18%, Wipro up about 0.17%. Sun Pharma up 0.1%, HCL Tech up 0.1%, Hero MotoCorp, TCS were absolutely flat. Chandan Taparia is now joining us. Chandan, what's happening on the derivatives side? You think a lot of panic selling is behind, or every day the way we think that it could essentially lead to a lot more flows coming in on the negative side?
Yes, we have seen a strong move in volatility index. India VX up by around 51% in this series. Series started from the VIX low of 13 levels, and now VIX is near to 21 levels, and that clearly indicates that panic is seen in the market. Talking about the index level, it is continuously making lower tops, lower bottom formation and falling down from higher levels. It is corrected by around 700 points from higher levels. It made high near to 7972 at the beginning of series and beginning of the new year, and recently made low near to 7241 level. But the maximum put open interest is intact at 7300 strike, and because of that, market may find some support and consolidate in a range. Although now it has to move above 7400, 7420 kind of zone to turn immediate base as a bottom facing approach. Otherwise, this weak structure may continue and market may consolidate in a range. So it has to negate this immediate pattern of making lower top, lower bottom formation. On downside, I am looking immediate support near to 7220, 7200 kind of zone, while upside hurdle near to 7400 to 7420 kind of levels. Those who are interested to play the bounce back move can trade with option, but I am not expecting much upside. I am expecting market to remain in a range bound and consolidate here for next coming trading session.
Right, Sanjeev, I just wanted to get your view as far as some of the oil names are concerned, especially Cain India. A lot of buzz on the street that Cain India may see a revised open offer coming from Vedanta that may actually sweeten the deal. Do you think that's something that one should play for or completely avoid it?
Well, Pankaj, it's been a long time since I've been with you, and you recall that I told you that stay away from the Vedanta group. Once they ruined the balance sheet of Cain India by bringing on the assets of Vedanta, the stock was almost 240. And we've had a sell rating from there on. Now as a value pick, you can, but the whole group is very heavily leveraged, and if the metals pack continues to be weak as it has, then I don't see much of a revival. Secondly, on the oil basis also, Cain is being hurt on both sides. So for us, if you wanted to play the oil recovery or you wanted to play some of the upstream companies, ONGC seems a very, very safe bet at these levels of 200, 210. For us, we would wait for the noise to be settled, a lot of action to come on the table, and the price action on the stock. Because for you, even though the events may be positive, if the stock is not going to do much, then it's not worth putting your money. So we would look for better names there. Reliance continues to be the top pick there, and if you wanted to play an oil recovery, then ONGC seems very, very, the risk on ONGC seems very little, and the rewards could be much handsome in going forward.
Right. Sanjeev, your view on Reliance Industries as well?
Well, the stock has been an outperformer all the way from 850 right up till close to 1100. Now the standard caveat that profit taking was on the cards because of better than expected results and everything built in. But anything you get it in 3 digits is again is a blind buy. For us, this Nifty recovery and Nifty up move, whenever it comes, would be led by Reliance. So Reliance is now back as the bellwether stock which was leading the market in the early 2000s, and I think after almost 4 years of hiatus, Reliance is back and running. So on any dip below 1000, you should be looking to accumulate Reliance with a 20% upside by the end of the year.
Right, Sanjeev, thank you so much for taking out time for us. Always a pleasure talking to you. Chandan, what would be your view on Reliance from the FNO side? What happened today? Was it pure profit booking?
Yeah, we have seen some built up of short position, but if I look at the entire picture of Reliance Industry of last 3-4 months, it has seen a strong recovery from 850 kind of levels to 1070, 1080 kind of levels. We have seen some profit booking in last 2-3 trading session, but still the major trend is intact to positive. Nifty is down by around 20% from its peak of March 9119, and this stock is up by around 14 to 15% from those levels. So this stock has potential to outperform the market. We have seen some built up of short position, but still stock is holding above its 50-day moving average. So for me, the medium trend is positive, so I'll buy on any decline. My support is near to 975, 980 zone. zone, while on upside I'm expecting it to head towards 1050 to 1060 level. So it's a stock which may outperform the market. If Nifty manages to hold, then definitely this stock can jump by 4 to 5% in next coming session.
Right. What is the feeling that you're getting on the banking names? You think banking names have much more downside left? As you said that Nifty may move in a range. You think banking names would see a lot more downside from here on?
Yes, we have seen sustained selling in Bank Nifty index. Bank Nifty is down by around 2200 points from its early series high. It made high near to 17,000 zone and now holding near to 14,900 level. So it has seen correction of more than 2300 levels and not getting any sign of relief. Although it is recovery from the lower levels, but now we require a change in trend and hold above 15,200, 15,300 to confirm a bullish pattern or confirm a reversal pattern on the market. So on immediate basis, I'm looking hurdle near to 15,200, 15,300. Over that only we'll get some positive sense on the counter, or we'll go for bottom facing approach. While on downside, it is immediate multiple support near to 14,750 and 14,500 levels. Interestingly, Bank Nifty is holding maximum put open interest at 15,000 strike, and that is the reason that it is bouncing from the lower levels. Now, if you talk about the selective banking counter, we have seen sustained selling in most of the PSU banks like SBI, PNB, Bank of India, Allahabad Bank, Union Bank, Andhra Bank. All these stocks are adding built up of short position. But in private bank, Axis Bank, ICICI Bank, they are finding some base. Axis Bank is going to come out with result, but the way it is turned for multiple support of 360, 380, and now holding the gains above 385 levels, I'm expecting it to move or reclaim 415 to 420 kind of level. So I may go for bargain hunting Axis Bank while allow it to go for bottom facing in selective PSU banks.
Right. As far as what you're saying, bottom fishing in names like Axis, you said about the results. How important will results be for these names? You think that results could turn the tide, or when volumes come in, whatever the results are, they may see extended pressure, because if somebody wants to exit without an impact, results day or the next day of the results should probably be idly that day.
Yeah, that's right fact and that's true, but we are here going for the database and the price formation. What I feel that if something happens negative, then already price is down by around 13 to 14%, and this stock is falling down continuously from last 6 series. It made high near to 615 in the July series and now holding near to 390, 400 level. So it is down by around 25-30% from high levels and continuously falling down. But just couple of days back, it made a low near to 368, 370 zone, and now holding that gains with rising volume activity. Stock is highly oversold, and because of that, some bounce back might happen in the counter, and that is the reason that we are expecting 415 to 420 levels. But those who are interested to trade can go for 390 call by paying the limited premium risk. Or if the stock moves, then one can get benefit around 25 to 30% in the premium.